Everybody's talking about First Republic Bank, a California-based specialty lender focused on serving rich Americans. It's going under. The bank enticed its affluent clientele with low mortgage rates in exchange for leaving cash at the bank. Apparently, even the money of the rich is not enough to keep it going. After announcing last week that customers had withdrawn more than half of its deposits, and First Republic didn't have enough cash to fulfill all of them. Their shares tumbled by 75%. By Friday, the Federal Deposit Insurance Corporation, or the FDIC, considered taking it into receivership. They also immediately asked other banks for potential bids on First Republic if the regulator were to seize the bank. Banks were worried that buying the company would saddle them with billions of dollars of losses, leaving regulators no choice but to take it over. They asked banks for final takeover offers for First Republic before the end of the weekend. They were scrambling over the weekend. JP Morgan, Bank of America, and PNC are likely bidders. According to CNBC, the FDIC wanted to turn over the bank to the highest bidder before the beginning of today. JP Morgan Chase won the race. This is the best case scenario for First Republic. Customers who would start the week knowing a financially stable operator now own their bank. More importantly, they could put an end to the banking crisis that began more than a month ago with the collapse of Silicon Valley Bank. The thing is that it will never really end because First Republic Bank's problem is the problem of the entire financial industry. Bob Michel, the chief investment officer of JP Morgan Asset Management, said that liquidity issues aren't just limited to the bank itself, but also could potentially affect the entire banking industry. Regulators may be able to save First Republic, but unless we resolve the regulatory problem, other banks are going to come next. Problem lies in the abuse of the fractional reserve banking. Why don't banks have cash? Deposited funds are used by banks to lend money to other customers or invest in different assets like the market, bonds, and even other businesses. The fractional reserve system requires banks to only keep a small percentage of total deposits in actual cash. Additionally, banks make more money from interest, whether it's a small business loan, a mortgage, or a line of credit. Your interest rate will be higher if your credit score isn't the best. As an example, the average interest rate for unsecured loans is around 10%, and for those with great credit, whereas the rate for those with poor credit can range. It could be anywhere from 18 to 36% difference. This system of debt has kept our system alive, but the recent banking crisis has shaken the public confidence. And that's all taking shake-up, and it's going to affect the financial markets. We need to overhaul the system, and by I mean the government officials, state leaders, and other financial institutions. They need to diversify some of this, and you need to diversify also. Banking regulations need to evolve, but you can't wait for that to protect yourself. You have to make sure that even though the banks say they're protected and they're doing a lot of things, you need to have assets outside of government control to truly protect your wealth and continue to grow it even with this current instability. Gold is the asset that billionaires, multimillionaires, and central banks run to. Gold is not controlled by any government and is truly global. It's just as desired and needed and as valuable in this country as it is in other countries. Make sure that when everything goes south in our financial system, you have assets outside of it to hold you and your family together. Invest in gold now.